What's going on, guys? Your boy Jermaine Houghton here, and I'm going to do a quick review of the pound versus the Japanese yen. Today is Sunday, October 30th. Almost missed the date there for a second. Still early. Everybody's watching football, but if you treat forex like a business, you definitely want to be in front of everybody else. When everybody else is watching football, if you're studying, making plans for your business for the week, you'll definitely be successful. So far looking at this setup on the pound yen, this is what I'm seeing. We'll start from the top down perspective. Therefore, we're on the weekly charts. What I'm seeing so far on the weekly chart, here is scenario one of this whole uptrend that we've been in for a while, and we've broken and been basically just a falling knife for the whole year. We've come right into the 886 retracement right into here. And as you can see on the chart, coming into that 886 retracement wouldn't be significant, but what makes it significant is that we've actually made a tweezer bottom at that price. If you were very new to Forex, you don't understand what tweezer bottom is, you can Google that pattern and see it's a very bullish pattern. Also, combined with the 886 retracement and the tweezer bottoms, you can see that we have another morning star pattern. Now, morning star pattern occurred right here. A morning star is these three candle formations that are in here, right? So far we have shaped up on the weekly chart another bullish morning star pattern. As you can see here, we got a tweezer. Tweezer really doesn't help the pattern, but these two candles are what signifies the morning star pattern. You have an indecision candle followed by another up candle. So that's what I'm looking at on the weekly chart that continues to make me a little bit bullish on this pound versus the yen pair. Also, in confluence with that, what I've found out, and it's through doing different ratios and researching, you find that the market wants to find these different ratios. And if you watch my other videos, you can see I like the 1-2-7 ratios for a completion of a move. Well, as you can see, this market has moved right into a 1-2-7 ratio. Let's make this a little bit bigger. Market fell right into this 1-2-7 ratio down here, and it's bounced from there. Now, this is no coincidence, and if you see my other trades before I've set up, I've used that ratio numerous times for very profitable trades. And for this market to be completing at that area, it's very much not a coincidence, and it lines up with the 886 retracement of the whole up move. So now, what I'm looking at now into the lower time frames, I'll go to the daily chart, see what we have going on there. The daily chart has been in this downtrend, as you can see by my downtrend channel, for ever since hitting that 138 from the last bullish move. So it's been in that downtrend channel for pretty much a couple of weeks now, and that has been holding it. And it's kind of just been stair-stepping its way down to find new lows, and we haven't been able to make any new lows despite all the bad news that's been coming out with the Brexit and everything else. So on the daily chart, still we have not any case to be very bullish as yet, but the case for the bears is not that significant either, as we're not making any new lows. Bears tend to get tired. They want the prices to go higher so they can push it back down again. Now, Friday, we did have a sell-off in the yen. All yen pairs did take a bit of a dive. They say it was because of the news. I say different because it's technicals. Now, so did the British pound take a dive also, but if you notice this downtrend channel that's been holding it, it's actually breaking outside of that. So what I'm expecting is for drop down one more time frame to everybody's favorite, the 4-hour time frame. I am expecting a pullback in this pair, but I'm actually buying on the pullbacks, right? What you want to see is, you want to see a pullback, but you want to see this channel that's been holding it to the downside as resistance, you actually want to see that channel line, which is here. You can draw it on your charts also. You want to see that channel line hold as support for a move back up. Now, a conservative trader, the way I would set this trade up, as a conservative trader, what I would do for this trade is I would actually wait until price breaks 129.20. If price breaks 129.20, you can place your stop losses somewhere below that level. That's up to you to decide based on your technicals. Maybe I'll do a video on that if I see a break and I find a good place to place my stop loss. But you can actually, on a break of that, you have a target all the way up to 133. So you have to set up your own risk to rewards to however you want it, but there's potentially 400 pips between here and the next resistance zone. So however you want to set your profit and loss for that, it's definitely, I feel like this is a great setup. Now, what nullifies this setup is if this market breaks below this trend line that is forming here now. If this market breaks below this uptrend line, you can expect to see a move back down into 125. Okay? Now, I'm not expecting that scenario, but you still have to weigh out all the possibilities because as you can see, this thing has been stair-stepping its way down. Every time it breaks these trend lines, you've gotten a new lower low. So watch that level, see if we get a bounce there. Like I said, a conservative trader would wait until we get a break of 129.20 to be bullish and set your profit targets in the 133.50 area. Me personally, I'm more of an aggressive trader. I'm looking at the bigger time frames, seeing that we have yet to return into these value areas up here. So I'm actually going to be buying on some of these dips starting the beginning of the week because I'm very bullish on the yen pairs themselves. Being bullish on the yen means that I think the yen pairs will move up. I always say that backwards, but this is the way I see the market. This is right here is the Japanese yen index, functions much like the dollar index. I do watch that to just get an overall perspective on where it's going. If you look at the daily chart, this is a 120-day moving average, and it's held this ever since it broke out all the way back end of the year, December, January of last year. You can see the breakout occurred here, and we've actually been in an uptrend ever since. And the last couple months, we've really just stalled out and been in a range up here on this yen index. But if you look over here and see what we're coming up on now, it's actually breaking back below that 120 moving average, which is definitely a bearish signal. So I do feel like the yen can come back and settle in the low 90s, somewhere around here where it feels more comfortable, especially with the seasonality of it. It's coming around Christmas time. They want to devalue the yen so that we buy all their products, give them to our kids for Christmas, XYZ, all that stuff. But that's fundamental analysis. I don't go into that. But definitely, with this crossing below the 120 moving average, it's definitely a signal that you want to be long some of these yen pairs. The strongest case would be the USD JPY. Then you don't have to worry about any Brexit concerns or anything like that. As you can see, that's actually breaking out, so that's definitely a buy on any dips. One of my favorite trades is NZD JPY. Why? Because they're going to pay me to hold it. I'm going to get paid a dividend to hold this. The New Zealand interest rates are 2.5%. Japan actually has negative interest rates, so you do get paid the carry on this trade. So this is definitely one that I like to hold in the bull case. The reason why I'm playing GBPJPY is because you get paid a little bit of interest on it, but I believe this one has the most upside potential because of the volatility. I don't make a lot of money on interest rate carries, but I do make a lot of money on pips. So I'm looking for the one that's going to deliver me the most pips. Longer term traders, in most of my long term accounts, I do go ahead and pick up some NZDJPY. I don't trade stocks, but I like to get paid dividends. NZDJPY pays a dividend, so I definitely like to be in that pair because of the interest rate carry. Now, I will be picking up some NZDJPY, but I'm mostly going to be focused on GBPJPY this week. So that's the one I'm going to be trading. Do feel like there's a lot of money to be made in that pair. Now, have been running this video a little bit longer than I used to on most videos, but like I said, I promised a couple guys I would break down GBPJPY for them, just for overall perspective on how I think the yen is going to move. And if you guys like the video, just hit the subscribe button. If you have anything you want me to break down, go ahead and put it in the comments, or you can send me a shout out on Twitter at DREAD_Y. I'd be always happy to answer your questions and concerns. And if you guys have any videos or any ideas that's counter to this, go ahead and put them in. I'll check them out to see what you guys have going on also, all right? All right, guys, until later on in this week, we'll see what's going on.